Elon Musk just fused a $1.25 trillion AI and space empire into a single company. And if you're evaluating either Tesla, SpaceX, or the broader AI trade, this changes your math. Welcome back to AI Assets. Today, we're breaking down Musk's merger of xAI into SpaceX, why it just became the biggest deal in corporate history, what it means for how you value his businesses, and how you should think about positioning around one of the most concentrated bets in the entire AI ecosystem. Let's start with what actually happened. SpaceX has formally acquired xAI, the AI company behind the Grok chatbot, folding it into the rocket and satellite giant. The combined entity is now valued at roughly $1.25 trillion, with SpaceX itself worth around $1 trillion and xAI valued at somewhere between $125 and $250 billion, depending on which banking documents you look at. This isn't just a paperwork exercise. Musk described the goal as building an innovation engine that unifies AI, rockets, satellite internet, and social media under one roof. He specifically pointed to space-based data centers as a core motivation, essentially trying to solve AI's biggest bottleneck, power and cooling, by moving compute into orbit. On top of that, xAI recently rebranded and released a new Grok model built on cursor-style coding technology, following a related $60 billion tie-up with the coding startup Anysphere. So, in a matter of months, Musk has stacked a mega merger, a new AI model, and a major coding tools acquisition into a single, tightly integrated AI and space conglomerate. Now, why does this matter for you as an investor? First, this merger changes the nature of your exposure if you hold anything connected to Musk's companies. Previously, xAI was a separate, high-risk, high-growth AI bet, while SpaceX was viewed more as a space and satellite infrastructure play with steady, contract-driven cash flow. Now, those two risk profiles are fused together. If you're exposed to SpaceX equity or SpaceX-adjacent instruments, you're no longer just betting on rockets and Starlink. You're also making a leveraged bet on frontier AI development costs, chip spending, and data center build-out. Second, this has ripple effects across the AI infrastructure stack. A trillion-dollar entity chasing space-based data centers will need massive amounts of compute, chips, and energy solutions. That's a tailwind for chipmakers, cloud infrastructure providers, and specialized satellite and launch suppliers, but it also concentrates enormous capital expenditure risk in a single, Musk-controlled organization. Third, this deal resets how markets will treat any future public offering tied to Musk's ecosystem. Reports suggest this combined company could eventually pursue a massive IPO, and any pricing, valuation, or investor demand data from that process will become a reference point for the entire AI and space investment category, not just for Musk's companies. So what is the market missing here? Most coverage frames this as a simple story. Musk consolidates his empire, becomes even richer on paper. The more important story is about risk concentration and cross-subsidization. By merging a capital-intensive AI company with a cash-generating aerospace business, Musk is effectively using SpaceX's steadier revenue streams to underwrite xAI's enormous compute and data center costs. That can work brilliantly if AI demand keeps compounding. But it also means that if AI spending disappoints or costs spiral, the pain no longer stays contained inside a standalone AI startup. It flows directly into the valuation of one of the world's most important space and satellite companies. There's also an overlooked structural pattern. Musk is building a vertically integrated, closed-loop AI system, from chips and data centers to satellites, distribution through X, and now coding tools through AnySphere. That's different from most AI plays, which rely on external partners for critical pieces of infrastructure. Vertical integration can be a genuine competitive advantage, but it also means more single point of failure risk tied to one person's execution and decision-making. Now let's talk about what happens next and what to watch. First, watch for any concrete IPO timeline or filing from the combined SpaceX xAI entity. Earlier reporting suggested a possible offering as soon as this summer, aiming to raise tens of billions of dollars. Any formal S1 filing or roadshow news will be a major signal for how public markets plan to price this integrated AI and space bet. Second, track capital expenditure disclosures related to space-based data centers and AI infrastructure. If Musk starts committing specific dollar figures or timelines to orbital compute, that tells you how aggressively this strategy is being pursued versus how much remains long-term vision. Third, monitor competitive responses from other major AI and space players. If rivals in cloud computing, satellite launch, or AI infrastructure start announcing their own vertically integrated strategies, that confirms this merger is reshaping competitive dynamics across multiple industries at once, not just within Musk's orbit. From a portfolio perspective, here's how I'd think about this. If you have direct or indirect exposure to SpaceX, recognize that you're now holding a hybrid AI and aerospace risk profile, not a pure space infrastructure play. If you're evaluating AI infrastructure plays more broadly, keep an eye on which chip, energy, and data center suppliers might benefit from this new, extremely well-funded buyer entering the space-based compute race. And if you're considering any future IPO tied to this entity, remember that a trillion-dollar valuation driven partly by ambitious, unproven ideas like orbital data centers deserves the same scrutiny you'd apply to any high-growth, high-narrative AI stock. The bottom line is this. Musk didn't just merge two companies, he merged two very different risk profiles into one, betting that AI's future infrastructure needs justify combining rockets with chatbots. For investors, the real question isn't whether this is ambitious, it clearly is, but whether you're comfortable holding that level of concentrated, interconnected risk in your portfolio. If you found this breakdown helpful, make sure you subscribe to AI Assets for daily, no-hype insights on AI investing, from mega mergers and infrastructure bets to the platforms and regulations shaping this space. Let me know in the comments. Do you think merging xAI into SpaceX strengthens Musk's AI ambitions, or does it just concentrate more risk into one giant bet? Thanks for watching. See you tomorrow.